Hello and welcome to what is day 7 of this Top Step Trader Combine. Thanks for joining me today on this video. It is currently coming up to 20 to 11 here in Central European time in Italy. It's Tuesday the 31st of January 2017, and today I had, as you can see, a one and done. Short up here at 827.5 and exited at 809. No, 809.5. So that was 27.5 to 9.5, 18, 2.6 R trade, I believe. 18 divided by 5, 2.6 R. So that was today. Today I would like to talk about the technicals, but I'd also like to talk about these points I've written up here, which is the things that were on my mind that I could feel rising in my emotions, and because I think it would be helpful if we all share these kind of experiences. And I know that, at least for me, if you combat these sort of things, if you become aware of them first and then work to deal with them, then you can get more out of your edge. So here is the box score, $221.32. Nice to be finished early for once, because as you know, if you've been watching my videos, I've been finishing around midday or 2 o'clock in the afternoon, and this time I was done by 8:08, just after 8 o'clock, after beginning 7 o'clock. So without further ado, let's have a look at the chart. So I was looking for the 13-minute chart. Is it the 13-minute? Yeah, the 13-minute chart was actually going up. We were above the 21 EMA, but the momentum was turning over, so pointing down. And I always have trouble, or it's relatively more difficult for me to enter against a trend than it is to go with a trend, even if I can see that that trend is turning. So what I did was I waited for a trap above a congestion zone, the pattern that I'm trading, and I had some targets projected out in a beforehand. We had a target here, not a target. This was where I was looking to add if an opportunity presented itself. Here at this the first blue arrow, and then at the second blue arrow, this was my first golden mean projected target. And for those who don't know, the golden mean is 0.618, and if you just Google Fibonacci, then you should be able to find out about the golden mean. So that was my final, that was a first destination, and then my final destination was this derivative of the golden mean, this green line here. So if we look at what happened, we broke above 828, which was the zone of action I was looking at. I wanted to see wicks at that line, wicks against that line as if it was failing to go down, and then a break back under 28 and wicks or some kind of rejection of the line. So an under to over and then back under. A fake out breakout, some people may call it. So I looked at the wicks here, and then I noticed it broke through, and all this time I'm thinking, you know, I'm going to miss the trade, I'm going to miss the trade. Fear of missing out was rampant there, but I held to my plan, and I was uncertain about whether I had even got the direction right, because the chart was pointing up, but the momentum was pointing down, and then eventually we got this breakdown here, and this was what was crucial. Let me just get the pen. So this is what I saw here. This was the line we were looking at, and then we saw wicks here, so I said fine. It broke above to get the longs into the position, made its way up here, put a wick against the zone of action, which encouraged longs even further, even more so, and then it broke under, closed under, and left this tiny little wick here. Excuse me, I've still got this terrible cough. So then it dropped off, and then when I saw this drop away here with relatively fast pace to the downside, I put my order in up here. And when something is moving that fast against you, it may look innocent now, but this big green bar here, it was quite a task to, it goes against human nature to step in front of a train, even if oftentimes that's the best way to catch the outer edges of a move. So that's what I got here. I was sure I was going to lose after this green bar. It didn't. It dropped off fairly quickly. You can't see it in the bars here, but if you was watching the price action, you would have seen that it dropped off quickly, at least on this bar here. That ended up being a hammer. And then it came back up to retest. If you look again, you see another hammer-like pattern, which suggested that it may want to break out still. Triggered that. Don't know if you can see that there. Triggered that hammer and then dropped off. And this is where we started to see real relative momentum come in here. A steep pace with these multiple red bars down, very few wicks, very little overlap as compared to all this price action, here. This had no overlap and a lot of red bars. So that was what happened there. And then here we didn't get a place to add, so I'll walk forward here. There was no place to add. And then we just fell off into my first target, so I trailed there, and that's how I got out of that trade. If you had more conviction, you could have held on and then added either here and taken off here, or let's walk forward. Yeah, if you had added there, put your stop, blended stop here, and then you could have taken off lower for a much bigger gain, because as you know, if you size into a position, then you've got double the leverage for the same risk. And then it eventually did, for all intents and purposes, that did hit the overall target I was looking at here, which this was the target zone, so I always go a few ticks, percentage points before that zone, and it hit that, and eventually later went even lower, and this is where we are now. If I go all the way forwards, we're all the way down here. So that was that, but what I really wanted to talk about was these points up here. I received a comment in a YouTube video. I won't bother showing you the exact comment, but it's in the last video. And basically someone giving advice, and I'm all for advice, but when that advice comes across as being told what to do, and I'm not in any way, shape or form saying that the person was wrong to leave that comment, but for me personally, one of my pet peeves is being told what to do, especially when people don't have the full story, and so that always gets a rise in my ego. And this can relate back to the market. So the market's telling you to go one way down, and you find yourself resisting that because I'm sure most people have come across this. Has it ever happened to you that someone's told you what to do, and what they're telling you to do is actually what you should do, and you find yourself resisting that? It's like it can throw you off being told what to do, even if it gives an added reason for you not to do what you were told to do. At least that's how my psychology works. So I have to ask myself whether I actually should do what I'm about to do, or whether I'm doing it to go against the person who's telling me what to do, or in this case, to go against what the market's telling me to do. And so this is something that I personally would watch out for if I was having trouble, if I found myself going against the market direction all the time. And then two here, fear of giving to those who predominantly take. In this case, I'm talking about my sister. It's a long story, but long story short, I find that she does a lot of taking and not a lot of giving. And so I find myself saying, well, why should I give to her? She always takes from me, she always takes from everyone. And if you are a giving person, and I would label myself as such, you will find yourself giving into a black hole, and then you tighten your grip, and you start to become less giving yourself. And so you may find that, as was the case for me, it was extremely difficult to hold this trade past the first add-on point, because I kept thinking about my sister, and why give the market the opportunity to take back your profits if you've got a good amount of profits, paper profits in hand. So that, of course, that doesn't work either in trading or in real life. We should continue giving regardless of how much people take and don't give back, because what you give, you get back tenfold. But it gets a rise again in ego, saying, well, I'm giving and she's taking, so I'm going to stop giving. And that relates directly to the market. We need, in my humble opinion, we need to be able to allow the market to give us the bigger rewards. And that's what I just about managed to do today, but it's a constant struggle, especially when you're thinking about things that are happening in your everyday life. And then finally, 3, rise in ego, when humility is mistakenly read as a lack of ability. And this goes back to my comment here. Just because you hear me talking about all of these so-called or real world problems in my life, or problems in the trading, doesn't mean that I haven't got a good handle on it. I'm just shining a light on what's there, because if you've ever been an alcoholic, I haven't been, but if you've ever had a dependence on something, either an eating disorder like myself or an dependence on exercise, you'll know that if you go to Alcoholics Anonymous, I think it's called, whatever it's called, the AA meetings, the first step to curing yourself is awareness, being aware of the problem. Then the second step is admitting it, opening up. And of course, you open up to some people and they think that you are struggling, but in my opinion, the people who are struggling the most are those who are unaware of problems that are plaguing them. So when I read comments such as the one that I read on the last video, although it's not a big deal, under the surface, in our subconscious, this can do all kinds of things to us that we're not aware of. And in recent years that I've been working on myself psychologically, I've become acutely aware that my ego comes out fighting when people mistakenly believe that my humility is a lack of ability. And then I go out trying to prove myself, when what we all need to do is stay humble, stay true to what's going on, and stay true to our plan. So that's all I have for you today. Hope that helped. If it did, please give this video a thumbs up. Subscribe if you want to see more videos like this, and remember to stay humble and follow your plan. See you next time.